Welcome, everyone, to another McGlone Sutner client exclusive quarterly update. I'm Peter Van Beek,
And I'm Matt Sutner.
and today we're going to talk to you with some updates about the One Big Beautiful Bill Act. Some of the things to know, major events. Still trying to learn some of this stuff as it comes out. We're going to hit you today with some of the heavy hitters that may pertain to your situation.
Yeah, and just remember, this bill has all sorts of stuff in it. We don't have all the details yet, and what we're going to talk to today is just some of the high-level stuff. So we definitely recommend you talk to your tax accountant to make sure that if some other things that we're not going to hit does apply to you, make sure you take advantage of that. So what I want to do first is take a step back to 2017 when President Trump had passed the original Tax Cut and Jobs Act bill. That bill had multiple things in it that had a major impact on pretty much everybody, every taxpayer.
Yeah.
The first main thing was they actually reduced the tax bracket. So, for example, as you can see on the screen here, before this act, the 15% tax bracket went down to 12%. The 25 went down to 22, and so on and so forth. But you can see at the top bracket, the 39.6 went down to 37%. That act, however, was only an 8-year act. For whatever reason, they put a sunset clause in there, and that sunset clause meant that at the end of 8 years, it would revert back to the original tax brackets without any congressional oversight moving forward. This bill would actually sunset at the end of 25. So at the end of this year, if nothing happened, these numbers would revert back to the original. Now, that's a big deal, right? I mean, that would essentially be a tax increase for all the taxpayers that have been paying taxes for the last 8 years.
And working and non-working, right? Because we talk about your current income wages, what your taxable income rate is at, but also retirees, if you're looking at Roth conversions, where you're at from a Social Security standpoint as well. So
Yeah,
big differences that can pertain to everybody and all of our clients.
yeah, massive impact. So the new One Big Beautiful Bill Act that was just recently passed in July made these tax brackets permanent. And what I mean by permanent is that there is no sunset clause. So in order for these tax brackets to change in the future, Congress needs to act. Okay, so that's one of the first main points it's probably one of the largest ones on here that affects everybody. The second, as you can see on the screen, is the standard deduction. So back in 2017, the Trump administration increased the standard deduction by basically doubled. They doubled it. So a married filing jointly couple went from $12,700 all the way up to $29,200 in 2024. That was also set to sunset without any congressional oversight. So this new bill that just got passed is making this also permanent, and meaning there's no sunset clause. In addition to that, they actually increased it slightly. So you can see in 2025, that married filing jointly standard deduction went up to $31,500. So we're going to be able to enjoy that. Any married filing jointly couples can enjoy $31,500 this year. Singles can be at $15,750. In addition to that, you may have heard about the Social Security taxes or President Trump talking about trying to get rid of tax on Social Security. Unfortunately, they were not able to do that. So Social Security is still going to be taxed. However, as a concession for the next 3 years or so, they added what they're calling a senior exemption. And basically what that is you can add an additional $6,000 exemption per person onto your tax return if you're over the age of 65. And so as a married couple, it's actually $12,000. So that effectively moves your standard deduction up to about $43,500 of tax-free income.
Yeah.
It's a big number. However, there's a couple catches here. First of all, there's an income phase out. So if you're married filing jointly, if you have $150,000 of taxable income or more, that exemption starts to phase out over time. Once you hit $250,000, it's zero. Anything above that, you don't get any exemption. For single, it's $75,000 up to $125,000. Now, the other thing is as I mentioned earlier, this isn't going to be forever. So there's a little bit of a sunset as well on this one. So this is only available from 2025, so this year, through 2028.
Yeah. So these are all obviously big things, big changes that are going to be affecting everyone. And a couple other differences too with child tax credit is a big one that everyone that has children to be aware of. That increased to $2,200 per child starting now, indexing for inflation then. So that's going to go up every year with inflation. So big thing for people with children to be cognizant of that. The dependent child must be under age 17 at the end of that tax year. So big thing to know for qualifying for the child tax credit. Estate tax exemption, a big thing that we talk about. That increased even further to $15 million per person starting in 2026. Also indexed for inflation going forward.
Yeah, in 25, I think it was 13.9, but
Yeah.
it was they were considering bringing it back to half that.
Yeah, so that it was way lower before the Trump administration with this. So these are just big changes that are happening, dealing with estate tax exemptions. Above the line charitable deductions, also a new thing in 2026. So that's $1,000 for single filers, $2,000 for joint. So the big thing to know with this, if you were taking the standard deduction in the past, you couldn't get these charitable deductions. Now you can still do the standard deduction and still get a small amount deducted for these charitable donations that you are making. And there's no income phase out for that. So big thing to know and be aware of with this. The SALT deduction, so that's state and local taxes. This really ties into what we were talking about earlier with the standard deduction. They raised that so much in the past, more than doubling it, which really was to simplify taxes for a lot of people. A lot less people were doing itemized deductions then and just taking the standard deduction. Well, that's changing a little bit here with these new changes in this bill, because while the standard deduction's increasing, they're increasing this SALT deduction way up through 2029. So not permanent like you mentioned with some of those other items, Matt. But so this new cap goes from $10,000 all the way up to $40,000 if you're married filing jointly, and it increases 1% annually through 2029. Reverts back to $10,000 in 2030. So there's also a phase out for this to be aware of, though. So it begins at $500,000 if you're married filing jointly, $250,000 separate. Deduction reduced by 30% of income over threshold. We don't really need to get into all the details on that, but it can't go below $10,000. So you'll be somewhere between $10,000 and $40,000 depending on your income phase out. This just means there's a lot more opportunities for people to be itemizing and doing that if you're doing charitable donations, stuff like that. So we'll have to talk with your tax advisors, talk with us, and there might be a lot more opportunities here from a tax reduction and tax optimization strategy moving forward.
Yeah, I mean,
bill.
the state and local taxes, the SALT tax this is a big deal, especially in those states that have high property taxes or high state income taxes and or things like that. So be aware of that if you're in those states, or if you have a very high property tax bill. This is a big deal for you.
Absolutely. And two other big things we just want to make you guys aware of: qualified business income deduction, otherwise known as QBI, now permanent and increased to 23% from 20% for certain eligible businesses. There's phase outs for that as well, $50,000 to $75,000 for single, $100,000 to $150,000 for joint. Just something to be aware of if you've been using the QBI, utilizing that in the past, that has increased. And another big thing, no tax on tips and overtime. So if you're someone that works in the service industry, or you work a lot and get tips, or you work a lot of overtime, up to $25,000 of that is now tax free. There is a phase out for that to be aware of. Again, $150,000 for single, $300,000 for joint, but another big change that could help you save on your bottom line.
Yeah, and you got to be a little careful with the overtime. There is some caveats to that. It's not every dollar that's considered overtime.
Yep.
It's just the incremental amount.
Yep.
So if you're making $20 an hour, your overtime is time and a half. So you're making $30 an hour at that point. It's only the $10 that's deductible on your tax return. So you actually get it as a deduction at the end of the year. You don't get it right on your payroll.
Yep. Good
income.
point to mention. It's just that 50%, that half on that 1.5 times that would not be included, but a big thing to be aware of for some of you that applies to. And Matt, do you want to mention one other big thing?
Yeah. The Trump administration with this bill came out with these things called Trump accounts. The new Trump accounts are tax advantage savings accounts for U.S. children, which can be created for any child under age 8. Each child born from January 1 of this year, so 2025, through December 31st of 2028, gets a $1,000 federal deposit into this account. Families and employers can contribute, but there's some restrictions on how much they can contribute, and they can contribute until they're age 18. The funds also grow tax deferred. So if you think about it, it's kind of like an IRA, so to speak. As you can see on the screen, this will begin in 2026, and there's a whole bunch of other items that we don't really know yet. They're still writing the legislation, but as you can see on the screen, there's some data on here, and you can read through that. We won't get into too many details now because there's just so much unknowns, but we just wanted to bring that to your attention.
Yeah, so these are some of the big things in this Big Beautiful Bill Act that we're going to talk about with you guys. As Matt mentioned, there's so much. This bill is over 900 pages long. So there's a lot of information here. Us as your advisors will continue to be learning about this bill, working with other accountants, attorneys, other advisors. Keep kind of nailing down the information and details of this. We'll get that out to you even further with more information as we learn more about it, especially like these Trump accounts, all the details for these, among other things. So just keep in touch with us. We will be in touch with you guys, sending this information out as we get it, of course, in our review meetings and phone call check-ins as well. If you think of anything else or have any questions in the meantime, feel free to reach out to us. We're always here for you guys, and we'll talk to you guys again shortly.
Thank you.
Thanks.